Hello, everyone, and good morning to you. Kindly confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get this session started. Okay, Carrie, good morning to you. Oh, thank you, Carrie, for confirmation. Okay, Katrina, thank you very much. Good morning. 34201117. Good morning. All right. I think we're all on the same page here. So I want to welcome you all to yet another promising session on Extra and Speed Live, hosted by myself, Sheriff Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities that is lining up for us during the New York session today. Well, it's also very important that I note here that this is the first day of the week, and definitely we are going to be taking random pairs. We'll choose random pairs which we want to be looking at, and then we will be projecting what our expectation is going to be for the week, after which we are going to be following up on this trade as the day goes by. Without further ado, let's dive into the chart and let's see what is happening at this moment. Well, if you have any pair you want us to look at, or any commodity or any cryptocurrency you want us to look at, feel free to drop it in the comment section and I will try as much as possible to inculcate it into our plans for today. And well, I'm excited that I'm back again live. During the later part of last week, we were not able to do the session due to technical issues that were beyond my purview, but glad we are back and live again, and let's get the session started. So May Love, good morning to you, glad to have you around. Then I saw Can's comment a couple of minutes ago. Can, how are you doing? It's been a while since I saw you. Trust you're doing well. Can wants us to do GBPUSD, of course. GBPUSD is one of the pairs I'm going to be looking at today, so I would advise that you stay tuned in so that you don't miss out on the high days we shall be projecting on the GBPUSD. So let's dive into the charts and let's see what is happening. So as usual, we shall be looking at the US oil and what is happening on the US oil. Well, the first thing we want to do is to scale up to the higher time frame, where we want to be looking at how price action is from an holistic perspective, after which we're going to be using the structures we identify on the higher time frame to determine where we want to be going this week. Well, let's scale up to the daily time frame, and what do we have on the daily time frame? Well, during the course of last week trading session, we had this bullish momentum. We took over close to 1,000 pips last week on the US oil. We took it right from around this area into around the $92 area last week. Now, looking at the current structure we have here on the daily time frame, it's obvious that price action has been on a very strong bullish momentum in the last 2 years, and this is evident after connecting the series of higher lows here to give us that resultant bullish trend line. However, if we zoom into what has been happening in the last 4 months now, that is somewhere around in the month of June, we can see that price has been on a bearish turn. We saw price do a retracement back into the bullish trend line since the month of June in such a way that price had a uniform lower lows and lower highs, and as a result of this, I was able to identify this bearish trend line to give us that guide of how price has moved in the last 4 months. So price dropped right back into the bullish trend line during the early days of the month of September. So we saw price come back into the bullish trend line, after which we witnessed a breakdown of that structure. And when we cited the breakdown of the structure, if you are with me since the beginning of the month of September. We were expecting that price will be coming back to do a retest structure to be sending price to the downside. However, that did not happen, as since the beginning of this month we started seeing bullish momentum that took price right back above that bullish trend line to make the breakdown of that bullish trend line a false breakdown. So in addition to the current structure we have here, I was able to identify the $86 level, which is going to be serving as our major key level. And remember, this key level has been our key level for quite some time now. And the reason why we've identified the $86 level as a major key level is simply because of how participants in this market has related to the structure in the past. If we come to what happened in the month of August, we saw how this level has been a buying niche for participants in this market. And then if we fast forward into the mid-month of August, we saw buyers came here again one more time to push price to the upside. Though during the early days of the month of September, we saw attempts by the buyers to push price to the upside here, but it was met with stiff resistance from the sellers as we saw a significant breakdown of that key level. Though price came back above the key level here, but the selling pressure here was so strong that buyers was unable to push price further to the upside. So we saw price climb to the downside here. And during the course of last week trading session, we witnessed a significant breakout of that key level at $86 level, which also shares a confluence with the breakout of the bearish trend line we identified earlier. So you can see from the current structure we have here, we can see how this key level around this area has been a major determinant of price action in the last 3 months now. So with the breakout of the bearish trend line here, sharing a confluence with the key level at $86 level and price coming back right above the bullish trend line, we want to be seeing the breakout of this key level as a bullish signal. And whenever we see a breakout of a structure from a technical standpoint, we expect that price is likely going to come back to do a retest of the structure, probably the retest of the bearish trend line that was broken last week to send price go to the upside. So we are going to be looking at the possibility that price might be coming back down into the key level here with the intention of a trend continuation to the upside. But if we look at the current structure we have here, we can see that last week price closed at around the $93 area. And one thing I also want to share with you here on the daily time frame is the major key level. Another key level identified between the $95 area and the $96 level. This level has been a major determinant of price action in the past. We can see buying pressure around here, and since the breakdown of that level at the $93, $95, $96 area, price has continued to trade right below that level. So we can see, and right now price is still right below that area. So going into the new week, we want to see how price is going to relate to the structure around this area. How we're going to be seeing, there are 2 scenarios we want to be looking forward to here. Are we going to be seeing a reversal pattern around this area, probably a double top structure, or multiple rejection of this level by the sellers to push price to the downside? That is one scenario we want to be looking forward to. And then the other scenario is the possibility of a breakout of that area, that is the $95, $96 level, where a retest of structure might be giving us a confirmation to join the trend continuation to the upside. So these are the scenarios we want to be looking at for this week. So in order to get a better perspective into what's the structure for how to take advantage of any potential opportunity here, we want to be scaling down to the lower time frame, after which we want to see how participants in this market has been relating to the structure here since the beginning of this week. So now scaling down to the 1 hour time frame, what did we find? So on the 1 hour time frame, this is what we see here. We can see as since the beginning of the week, price started the week around here. We saw our price started at around the $93.50 level, and what we saw here is more or less like a selling pressure at this point. So we saw price started up with a selling pressure. Price came to the lowest point it has ever gotten to this week at around the $91.50 area, and since then price has been caught within a consolidation phase. So we want to be patient enough to see what is going to be happening here in order to take advantage of any potential opportunity. So the first thing I did here is to identify this channel right within the $93.50 area and the $91.50 level. As we can see, since price tested the $93.50 level, we have seen price come back within this area, and we begin to see multiple rejection of the $91.50. However, if we look into the structure, we can see that the $92.50 area is yet to be broken. So we have a high here at the $93.50, and then the next high we have here is around the $92.50 level, which is more or less a higher low, as price has been unable to break above this previous structure. So what I want to be looking forward to right now is two scenarios here. The first scenario is if a breakout of the $93.50 level happens, then a retest to structure will be giving us a confirmation to join the rally to the upside. Since we already have a bullish momentum since last week, so if a breakout of the $93.50 level happens, then we want to be looking forward to a trend continuation to the upside. However, if a breakdown of the $91.50 level happens, remember, we don't want to get too excited, as the breakdown is only a signal, as we want to wait for price to give us a confirmation in the form of a retest of the structure, after which we want to be joining the decline to the downside here. So as you can see, we need to be very patient here to wait out for the signal to happen, and the signal will only happen at a breakout of the structure. So we want to be patient here on the USOil. So if we are going to be selling, that is, if we cite a breakdown of the $91.50 level, then a retest to structure to the downside, where will our take profit target be? Well, in order to get that, let's scale up a little to the higher time frame so that we can see the current structure we have here. So if a breakdown of the $91.50 level happens, well, what we want to be looking forward to is a situation where price might likely retrace back into the key level here, so we might be looking forward to price coming back into the key level around here, where the second wave of the bullish momentum might be happening. So that is what we want to be looking forward to here. So I'm still leaning towards a selling momentum here on the USOil if a breakdown of that $91.50 level happens. I think I will have to pause here, and if you have any question regarding what I've just discussed so far, feel free to drop in your inquiry in the comment section, and I will be willing to be of help in that regard. Hall 359, good morning to you. Glad to have you around. And how was your weekend? Pirate 974, good morning to you. 787, good morning. Maiva, hi, hello, good morning. Jejerek, hi, good morning to you. How are you? Okay. So if you have any question regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section, and if there are none, we will be moving on to the next pair. So I'll be holding on for like 10 to 15 seconds to see if there are any inquiry, then I will be moving on to the next pair. So let's see how this goes. Alright, so let's move on to the next pair at this point, and then the next pair we're going to be deliberating on is going to be the US tech and what is happening on the US tech. Well, let's scale up to the higher time frame and let's take a look from a holistic perspective. Remember, during the course of last week's trading session, we had this bearish momentum right from the $11,700 level where we took some I think about 600 pips there about during the course of last week, and we were quite very profitable on this one. Sorry. So we were quite profitable on the US tech last week, and right now we are right back within the demand zone we identified last week. So looking at the structure we have here on the daily time frame, it is obvious that price action has been on a very strong bearish momentum since the beginning of the year, and this is evident after connecting the series of lower highs here to give us this resulted bearish trend line. So with the bearish trend line we have here, definitely we want to be thinking of bearish momentum here. However, if we look into the current structure here and rewind back into the month of June, we will notice that the $11,000 level has been a major buying niche for participants in this market. We can see the first 10 price came within this area within this year. We saw our buyers gathered here to push price right to the upside, and even in the month of July we saw multiple rejection of somewhere close to the demand zone to emphasize the strength of the buyers at this point. Now, fast forwarding into the month of September, in fact, the later part of the month of September, we saw how our price was rejected multiple times here by the buyers, giving us a clue of how strong the buyers are within this juncture in this market. So at this point in time, I'm going to be very wary of selling the US tech at this point, as price is still within that very strong demand zone which we have identified around the $11,000 level. Now, if I want to be selling the US tech, what I want to be looking forward to is a breakdown of this demand zone. So if price breaks down this demand zone in such a way that we have all the buy positions here taken out, then definitely we want to be seeing that as a bearish signal. And remember, if we see a bearish signal like this, we don't want to get too excited, as we want to wait for further confirmation, which is likely going to come in the form of a retest of the structure, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the downside. So if this bearish momentum does not happen, that is, we don't have a breakdown of this demand zone, then definitely what we want to be looking forward to here is a buy momentum. As long as price continue to oscillate right above the demand zone here at the $11,000 level, we want to be looking for buying opportunity, as price might be respecting the structure like it did 3 to 4 months ago here. So in order to get a better perspective into the current structure we have here, let's scale down to the lower time frame, that is the 1 hour time frame, and let's see what is really happening since the beginning of this new week around this area. We want to see how participants has been relating to the structure within the buy demand zone here since the week started. So we scale down to the 1 hour time frame, and scaling down to the 1 hour time frame, what do we have here? So on the 1 hour time frame, we can see here that we had this sell gap. The first thing I observed here was the sell gap here. We saw price closed at around the $11,000 area during the $11,050 level during last week, and we saw price began the week at around the $11,005, giving us this huge gap. That is the first thing I was able to observe here. And the second thing I observed is that price has been consolidating right within the $11,050 area and the $10,950 level since the beginning of this week. So we can see how price has been caught within a consolidation phase. And what does this tell us? It gives us a clue that there is an indecision in this market right now. And remember, I showed you that we are within a very strong demand zone at this point. So it's very, very possible that participants are looking at, okay, fine, this area has been a buying niche for participants in the past. How will it turn out again to be another buying niche again the second time? Or are we going to be having a breakdown of the structure? So caught within this dilemma, what are we going to be doing as we head into the New York session today? So the first thing we will be doing right now is to identify the structure, that is the consolidation phase we have here. And one thing we'll do is to connect the resistance point here and also the support level at this point. So what we're going to do is to label this area for the sake of clarity so that we could have a visual understanding of what we are talking about here. So we have the $10,950 level has the support level here, and then we have the $11,050 area, which is going to be the resistance level of this channel, and we have the $10,950 level as the support level of this channel. So from a technical standpoint, when we look at the structure, definitely this is more or less looking like a trend continuation pattern in the form of a bearish rectangular pattern. So we had this impulsive move right into this area, price caught within a consolidation phase, evolving into a reversal pattern in the form of a bearish rectangular pattern. And from a technical standpoint, one thing we will be expecting is that price is likely going to be breaking down the $10,950 area to give us that bearish signal, after which we look out for a retest to structure on our lower time frame to join the decline to the downside. So this is what we are going to be looking forward to on the US tech. However, we can't ignore the fact that price is within a very strong demand zone, as a breakout of the $11,050 area might be a bullish signal. And if that happens, remember, we don't want to get too excited. We want to wait for further confirmations to happen in the form of a retest of the structure, after which we look out for patterns on lower time frame to join the potential rally to the upside. So these are the two scenarios we're going to be looking forward to on the US tech for this week. So during the New York session today, let's get ourselves prepared for a breakout on either side. It could be a breakout to the upside, it could be a breakdown to the downside, but the most important thing is that we want to wait for a retest of structure to happen to give us that confirmation to join the potential decline or rally at this point. So this is what we are going to be looking out for. If you have any question regarding the US tech, feel free to drop in your inquiries in the comment section, and I am willing to be of help when necessary. So I will be taking the next 10 to 15 seconds to read through the chat to see if there are any inquiry whatsoever, and if there are none, then we move on to the next pair. So let's see what is happening here in the chat. We have, okay, light speed, good morning to you, how are you doing today? And then we have Starek here, good morning. Mayat Coco, good morning to you. 7115 7922, good morning everyone. I trust you had a wonderful weekend. All right. So in the absence of no questions whatsoever, let's move on to the next pair. So what I'm going to be doing right now is to take random major pairs. We're going to be looking at most especially the USD pairs going forward. Let's see, I have like 3 or 4 pairs that I saw trading opportunities that we could take advantage of during the course of the weekend. So I will be sharing that with you in a moment, and let's see how we could take advantage of any potential opportunity here. So the first pair we are going to be looking at is the commodity, the XAUUSD, which is the gold. And on the gold, as of this morning, I actually missed this bearish move that started this morning. So let's quickly look at what has been happening so far since in the last couple of months now. And in order to get that, we need to scale up to the higher time frame, and let's see what is really happening in this market from a technical standpoint. Now, scaling up to the higher time frame here, the first thing you will observe here is that the XAUUSD has been on a very strong bearish momentum since the beginning of the year. Since around the month of March, we saw how prices consistently found lower lows and lower highs, and as a result of this, I was able to connect the series of lower highs here to give us that resultant bearish trend line, as you can see on your screen. Now, during the course of last week's trading session, what did we see here? We saw this bullish momentum. I think in the last 2 weeks now, we saw our price has continued to climb to the high side, and right now, and during the later part of last week's trading session, we saw our price came right back into the bearish trend line here, respecting it one more time, hereby pushing price to the downside again. So going into the new week now, what is going to be our expectation here? Is price going to continue to the downside in such a way that it respects this bearish trend line one more time to push price right to the downside? Or are we going to be having a situation where this bullish momentum is probably going to be a signal of a trend continuation to the upside in such a way that we have this move as a retracement phase of that impulsive move, after which a trend continuation pattern identified on the lower time frame will be inciting a trend continuation to the upside. So before I go into the details of what our expectation is going to be like for this week, I would like to share with you the key level I was able to identify at around the $1,608 area. Well, this level has been a very significant level that we've been monitoring since last week. If you've been with me since last week, you remember that we have been using this key level as our yardstick for quite some time now. Now, the reason why we have this key level as our yardstick is simply because of our price has been respecting that level since the month of September. So we saw how our participants in this market gathered around this area to push price to the upside, though it was not that strong, as sellers finally broke down that structure, after which we started seeing multiple rejection of this level by the sellers to further push price to the downside. However, during the course of the last 2 weeks now, we saw our price has finally broken right above that key level to probably send a bullish signal. But because of the bearish trend line we have here and participants respecting this bearish trend line one more time, we want to be very careful of thinking of a trend continuation to the upside at this point, as we really need to understand the current structure around this area to be able to make a decision here. So what we want to be doing as we head into the New York session today is to see how participants in this market is going to be relating to the $1,680 key level, which we have identified here on the daily time frame. So this key level is going to be our major yardstick for this week. So if we continue to see a breakdown of this key level during this week, a retest of structure should be giving us a confirmation that price is going to the downside. And if we see a situation where we have multiple rejection of this area by the buyers, then we might be thinking of a trend continuation to the upside. So let's scale down to the lower time frame, that is the 1 hour time frame, and let's see how participants in this market have been relating to the structure here. So scaling down to the 1 hour time frame, what do we have here? And let's see how price started the week with. So the week started on a very strong bearish momentum. We saw our price was within that $1,700 level, and then since then price has been continuing to the downside, though I actually missed this move because I woke up quite late this morning and I missed this move to the downside. But I'm thinking that we might be having another opportunity to join the decline. So if you have actually joined us from this point, kudos to you for taking advantage of that move. But if you are not, let's see how we could actually take advantage of any second potential opportunity. But before I do that, I want to share with you a structure which we identify on the 4 hours time frame, which is more or less supporting the tendency of selling the XAUUSD. So looking at the 4 hours time frame here, the first thing we observe here is that price, we have a reversal pattern right around that bearish trend line, which looks more like a double top structure. If we have let me give you a visual representation of what I'm talking about here. We have this impulsive move in the last 2 weeks, and we saw that as soon as price got into the $1,730 level, we saw the first rejection here, and price came back again, but was unable to break the previous high here, hereby resulting into a lower high. And then we have a breakdown of the neckline at the $1,705 area to give us a mature reversal pattern in the form of a double top structure. And then during the later part of last week's trading session, we saw a quick rejection of that neckline to give us a confirmation that a trend continuation to the downside is very reasonable at this point. And now if you look at the structure here and you look at the neckline also, we can see that the breakdown of the neckline also shares a confluence with the breakdown of that bearish trend line we identified on the daily time frame. And we remember we are on a very strong bearish momentum on the daily time frame, and price has continued to trade right within the right under the bearish trend line. So in this regard, one thing I want to be looking forward to here, there are two scenarios we want to be looking out for during the New York session today. We have a key level at the $1,680 area where price is at right now. Let's, in the next couple of hours, we want to see how price is going to be relating to the structure. Are we going to be having a situation, hold on a second, are we going to be having a situation where price will be respecting this key level in such a way that price comes back to do a retest of either this bearish trend line here or the neckline at around the $1,705 area, in such a way that we have rejections that will be sending price to continue to the downside? That is one scenario. Or are we going to be having an outright breakdown of this key level, retest to structure, to be sending price to the downside? So this is what we are going to be looking out for on the 1 hour time frame. So now on the 1 hour time frame right now, we already have a situation where price is already trading right below the key level at the $1,680 level. So if you are not in this trade yet, well, I will be suggesting that you wait for probably a significant breakdown of the structure, where a retest will be giving us a confirmation in such a way that we look out for structures on lower time frame that will be supporting a trend continuation to the downside. So it could be multiple rejection of this level, or probably reversal pattern here. Then we could join the decline to the downside here. However, if price breaks right above the key level, that is, price breaks above the key level here at the above the $1,680 level, I want to be seeing this move as a retracement of that previous impulse leg in such a way that price might likely come back to where it started the week, or probably do a retest of this bearish trend line which we identified on the daily time frame, after which we want to be looking out for reversal patterns on lower time frame to join the trend to the downside. And if that happens, a breakdown of the key level one more time, a retest of that structure will be giving us further confirmation to add more position to our existing trade. So this is what we are going to be looking forward to on the XAUUSD. So let's see how price action is going to relate to the structure during the New York session today. And definitely, we are going to be coming back here tomorrow to make a review and do a follow-up detail in that regard. So if price breaks right back above the $1,680 level, if you are a counter trend trader, you might want to take advantage of that move your stop loss accordingly as price move in your favor. However, if price comes within this area, we want to be looking forward to selling opportunities around this area to join the decline to the downside. So in order to make our job easier for this week, what I want to be doing is to recognize this impulsive move to the downside from here and using that as our yardstick to identify a sell window. And to identify a sell window, we want to be looking at the golden zone area, which is an area between the 50 and the 78.6% of our previous impulse leg. So if we bring out our Fibonacci retracement tool here, run it through this impulse leg. Remember, this impulse leg is yet to end. We are not sure if this impulse leg has ended here, or are we still going to be having a situation where price might still go further to the downside. But the only way we will know that the impulse leg has ended is when we start seeing reversal pattern around this area. Then we know, okay, fine, a breakout retest of structure, then we know this impulse leg has ended. So what I'm just trying to say here is to simulate what you want to be doing when finally we've identified the impulse leg has ended. You run your Fibonacci retracement tool through wherever the impulse leg ends. It could be here, but at this point, for the sake of this video, let's use this area at this point. So what we want to be doing is to identify somewhere between the 50 and the 78.6% as a sell window to take advantage of a trend continuation to the downside. So if we have somewhere here, hold on a second, let's label this level for the sake of clarity. So we have it right inside the box, and let's give this a green color, and then let's make this a yellow so that it will be clearer. So we have a sell window around here. Remember, I told you that we are not sure if this impulse leg has ended, and the impulse leg will only end when we sight a reversal pattern around this area. So let's wait and see how far this impulsive move is going to go. If it finally forms into a reversal pattern, just draw your Fibonacci retracement tool through the impulse leg, identify an area within the 50 and the 78.6%, then we look out for selling opportunities around this area. And if you look at the sell window we have here, you can see it also shares a confluence with the neckline that we identified earlier at around the $1,705 area. So if price continues to the upside, then we want to be looking forward to selling opportunities around this area. So that is how we want to look at the XAUUSD for today. If you have any questions whatsoever, feel free to drop in your comments in the comment section, and I will be willing to be of help in that regard. Okay, I have Innocent Babe in the house. Welcome. Good morning to you. How are you doing? I'm fine, thank you. Thank you. Well, I think you met us doing the gold. I hope you didn't miss out on the idea we shared a couple of minutes ago. All right, and sorry about last week. We were not able to continue due to some technical issues, but I'm glad we are back again and live, and we're looking forward to a very profitable week. Okay. 359 wants us to do something on the USDJPY. Okay, USDJPY is part of my plans for today, definitely. So please stay tuned then, as I will be taking that pair probably in the next minute. Okay, how 107. I hope I pronounced that correctly. How are you doing this morning? Good morning to you. All right, Susie MB, how are you? 790. Okay. All right. Okay, Innocent Babe. I'm good to. Oh, glad to hear you're good. I'm glad to hear you are fine, Innocent Babe. All right. Okay. So let's move on to the next pair. So the next pair we are going to be looking at right now is the GBPUSD, and let's see what our expectations are going to be like for the week on the GBPUSD. But before we go into that detail, one thing I want to do here is to scale up to the higher time frame so that we can have an holistic perspective of what our expectation is going to be for this week. So on the daily time frame, the first thing we are going to observe here is that price has been on a very strong bearish momentum. And before I go into the details of the GBPUSD, I want to share with you the major events that is likely going to be driving price movement for this week for the GBPUSD. And in order to do that, I was able to spool out I think a couple of events here. And if we look at what we have here on the economic calendar, we can see here on Tuesday we have the claimant count charge, which is coming up on Tuesday. Then we have the ILO unemployment rate coming up on Tuesday as well. And this event is likely going to be affecting the pounds for this week. Then on Wednesday, we have the almighty FOMC minute coming up. And you all know that this is also going to be a very key event that is likely going to be affecting the dollar during this week. Then on Thursday, we have the consumer price index for the dollar. And then on Friday, we have the USD retail sales. Then we also have the Michigan consumer sentiment. So we have quite a lot of events for this week that have of high priority and will also be affecting either the GBPUSD or the gold or either the pound or the greenback for this week. So going back into the chart here, we can see from a technical standpoint that price has been on a very strong bearish momentum, and as a result of this, we were able to identify this bearish trend line after connecting the series of lower highs here to give us what we have here. Zooming into what has been happening since the month of July, I have a very strong key level around the 1.1800 level, which has held price supported or resisted at one point in time. We can see here in the month of July where buyers came here to push price to the upside, and then we had an attempt by buyer to push price to the upside here, but was met with stiff resistance from the sellers, which led to a final breakdown of the 1.1800 level. And since that breakdown happened in the month of August, price has continued to trade right below that structure. As we can see what we have here, price has continued to trade right below that level. And if we fast forward into the month of September, that is last month, we saw how the 1.1400 level has been a major determinant of price action in the last 5 to 6 weeks now. We saw this level was a very strong demand niche for about 2 weeks before we witnessed the breakdown of the structure a couple of weeks ago. So we had the breakdown of the 1.1400 level a couple of weeks ago, and from a technical standpoint, whenever we cite a breakdown of a structure or breakout of a structure like this, we expect that price is likely going to come back and do a retest of structure. And this is exactly what happened as we saw price came back into the 1.1400 level during the course of last week's trading session, and we saw how price has continued to trade to the downside in that regard. And one thing we will say here is, okay, fine, we're on a very strong bearish momentum. Price has broken down the 1.14, respected it by rejecting that level with very strong bearish momentum, as we can see the engulfing bearish candle pushing price to the downside. However, we cannot ignore the fact that since price tested the 1.0400 level here, since the breakdown here, we saw a reversal pattern around this area that will push price to the upside. So you will get a better view into this when we scale down to the 4 hours time frame. So on the 4 hours time frame, this is what we have here. On the 4 hours time frame, we saw a structure since the breakdown of that 1.14 a couple of weeks ago. We saw a situation where price tested the 1.0400 level, a very strong psychological level, hereby evolving into a reversal pattern as we saw price found higher lows, which led into the significant breakout of the 1.0900 level, which is now going to be serving as our neckline. So we have a neckline here. Hold on a second. I want to bring this into our view. Okay, good. So we have this neckline. Remember, when we have a reversal pattern like this, we definitely want to be having a neckline that will be guiding our action. So since the breakout of the structure during the later part of the month of September, from a technical standpoint, we expect that after the breakout of the neckline, we expect that price is likely going to come back to do a retest of that neckline in such a way that we will be having a situation that might be sending price to a trend continuation. Now, going into the new week, well, before I go do that, I want to let you know how I identify the buy zone here. Bringing out our Fibonacci retracement tool, running it through this previous impulse leg here, and aiming at somewhere around the 50 and the 78.6% level. We have, oh sorry, not that area. This is the impulse leg here. The impulse leg is here. So we have between the 50 and the 78.6% as an area that we might be looking for buy opportunity if price does not continue to the downside. So if price comes within this area, we might be looking for a reversal pattern. It could be a double bottom structure. This could be your inverse head and shoulder pattern. But we wait out for a breakout retest of structure to confirm that price might be going to the upside. But considering a long-term bearish momentum here, we might not want to jump into such conclusion, as we want to see how participants in this market will be relating to the structure here. We want to see how price is going to relate to this area in order to make a decision. Remember, last week started around this area. We started the week around this area. We took advantage of about 200 pips here last week, and then we took advantage of another 130 pips as price came back to where it started the week. So we can see how this level at around the 1.110 level has been a major determinant of price action in the last 2 weeks now. So we want to see how participants in this market is going to be relating to the structure. So if we have a situation where price, we see bearish momentum here, then we want to be having our take profit target within the buy zone here, after which we want to see what is going to be happening around this area. Now, if we scale down to the 1 hour time frame to see how participants has been relating with the structure, the first thing I was able to observe on the 1 hour time frame is a situation where price has been caught within a channel since the beginning of the week. We can see how price has been caught within the 1.11100 level and the 1.10500 area since the beginning of the week, to give us a clue of an indecision in this market right now. So because of this indecision in the market, I was able to identify this channel. And if we look closely into the structure from a technical standpoint, this is more or less like a bearish rectangular pattern. So we have this impulsive move to the downside, price caught within a channel. This is a bearish rectangular pattern. And from a technical standpoint, what are we going to be expecting? From a technical standpoint, a bearish rectangular pattern is going to give us a breakdown of that structure. That is the breakdown of the 1.10500 area. Remember, we are not getting too excited at the sight of a breakdown of structure. We want to look out for a retest of that structure to give us further confirmation that price is likely going to the downside. And if this happens, remember I told you we want to be having our take profit target somewhere around the buy zone area, which also shares a confluence with the neckline of the reversal pattern we identified on the 4 hours time frame at exactly the 1.0900 level. So if price moves as expected, we should be having a minimum of 150 pips to about a maximum of over 400 pips to catch here if price moves in that direction. However, considering the bullish momentum since the later part of last month, if a breakout of the 1.11100 level happens during the New York session today or at any point in time during this week, we have a breakout of this channel. We'll wait for confirmation in the form of a retest of the structure, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. So these are the two scenarios we are going to be looking forward to on the GBPUSD. So I will advise that we remain patient and be on standby to be able to take advantage of that opportunity when it finally happens. Remember, we are not getting too excited when we sight a breakout or breakdown of the structure. We want to be patient enough to wait for price action to give us further confirmation to join either the rally or the decline at this point after a retest of structure happens. And remember, if a retest does not happen, that is, we don't have a confirmation, we just pass that trade. Don't let us get caught up in the fear of missing out syndrome, which always takes us into a position that we are not supposed to be in the first place. So this is what I want to be looking forward to on the GBPUSD. If you have any question whatsoever in that regard, feel free to drop in your inquiries in the comment section. I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions regarding what I've just discussed so far before we move on to the next pair. So someone is asking for the Hindi version. Well, unfortunately, I don't speak Hindi. 868, good morning to you. Gitsman, good morning. Glad to have you around. So in the absence of no question, I'll guess we just have to move on to the next pair. And what's the next pair we are going to be looking at? The next pair we are going to be looking at is going to be the silver. I have something to share on the silver as well. And on the silver, I have a similar scenario with what I have on the gold. Now let's scale up to the higher time frame and let's see what is really happening on the higher time frame. And if we scale up to the daily time frame here, we can see that price has been on a very strong bearish momentum since the beginning of the year. And as a result of this, I was able to identify a couple of structures that will be guiding our actions going forward. Well, the first structure I was able to identify here is the strong bearish trend line. After connecting the series of lower highs here, I have this bearish trend line, though we had the breakout of the structure, but afterwards price came back to respect that bearish trend line. So we had the scenario here, price continued to respect that bearish trend line, and during the course of last week trading session, we saw an attempt by the sellers to push price to the downside from that area. So this shows you that this bearish trend line is really a very, very strong one that will push it and is reliable for us to guide our action going forward. In addition to this bearish trend line, I was able to identify this descending channel also since the month of February, as we can see after connecting the series of lower highs and lower lows. So we had the scenario here, though we had breakout here, price came back, then we had the lower low here, we had the lower high, we had the lower low, lower high here, and then we had the lower low as well, lower low, and then finally we saw the breakout of the structure during the last week trading session. So the question right now is that since the breakout of the channel happens, that is the breakout of the descending channel happens, how are we going to be seeing this as a bullish signal? Well, because of the bearish trend line we have here, we want to be very careful here, as whenever we cite a breakout of structure, we expect that price is likely going to come back and do a retest to structure in such a way that we will be having patterns on lower time frame that will be supporting a trend continuation to the upside. But we're not going to jump into conclusions yet. In addition to the structures we have here, I was able to identify a very strong key level at the $21 mark. And if you look at the structure here, we can see how this level has been a major determinant of price action since May of this year. We can see how buyers came here. We saw buyers, then we saw selling momentum around this area. And since price broke the structure in the month of June, we have seen that price has consistently traded right below that key level at the $21 area. So this key level is a very, very strong one. And for us to be buying this level, for us to be buying the XAGUSD, it's looking like we need to see price breakout of the $21 area to give us that confidence that the buyers are actually coming in to take advantage of this trade. So now, with the current information we have here on the daily time frame, how do we intend to trade the XAGUSD? So in this regard, we will be scaling down to the 4 hours time frame where we begin to see things more clearly. So on the 4 hours time frame, the first thing we'll observe here on the 4 hours time frame is that we saw the rejection of that $21 level. Remember, we had this level here. We had the $21 level. Let me bring this in a little bit so that we can see very clearly. So we have the $21 area here. And one interesting thing that happened around the $21 level is that we have multiple rejection of that bearish trend line as well, showing a confluence with that key level. And to make this more interesting, we have a reversal pattern right around this area. And we have a reversal pattern in the form of a double top structure. As we can see, we saw this impulsive move to the upside. We saw this impulsive move to around the $21 level, which also shares a confluence with the bearish trend line. And then price came back into the $20.30 level. And then we saw a higher low, sorry, a lower high. Price was unable to break the previous high. And then we saw the breakdown of that neckline at the $20.30 area to give us a fully matured reversal pattern. So with the breakdown of the neckline from a technical standpoint, we expect that price is going to come back to do a retest to structure, after which we look out for patterns on lower time frame to join the decline to the downside. So this is the scenario we want to be looking forward to as we head into the new week. However, with the current structure we have here, we can't ignore the fact that we have been witnessing a bullish momentum in the last 2 weeks. And there is a possibility that this move might be a retracement of that bullish momentum in such a way that price comes right back into somewhere around the golden zone area, which is around the 50 and 78.6% of the previous impulse leg. Let me identify that before we go on. So we have an impulse leg run here, and then we should be having a buy zone right around this area, considering that impulsive move to the upside in the last 2 weeks. So let me give this buy zone. It's going to be a question mark, but we're not sure it's going to be a buy zone considering the long-term bearish momentum we have here. So let's just put a question mark there anyways. And then we have this painted yellow. All right. So let's give it inside and then place it right at the center. So we have a buy zone here. So definitely we are going to be taking that into consideration as well. Now that we have the scenario and prices right around the buy zone area, could this area be that's incitation that will be pushing price right into the neckline at the $20.30 area, where we want to be looking forward to a sell momentum to the downside? So that's a very big question mark. So let's scale down to the 1 hour time frame, and I think we will get an answer on the 1 hour time frame after monitoring how participant has been relating to the structure here since the beginning of the week. So now scaling down to the 1 hour time frame, let's see what is happening on the 1 hour time frame. So on the 1 hour time frame, we obviously have seen that price has broken the neckline, and though we had multiple rejection of that level, but that is not enough for us to make a decision. So now on the 1 hour time frame, what we observe here is that price started the week at around the $20 area, was caught within a little channel here before we started the breakdown of that structure. High personally missed this move to the downside. In fact, it was painful when I woke up this morning to see that move to the downside, and I missed it. And one thing I said, okay, fine, since we made that move, it's okay. Let's see if there is any other second chance that we could be taking advantage of. Well, if you are taking advantage of that bearish momentum at that point, kudos to you for being on standby to take advantage of that move. But for me, I missed it. So one thing I want to be doing right now is to wait to see if we are going to be having a second chance. Now, like I showed you on the higher time frame, a second chance will likely be a situation where price comes back into where price started the week with, will probably come back into the neckline area. So we have somewhere around here to look out for selling opportunities. So that's the first scenario I want to be looking forward to. So what I want to do here is to take this impulsive move into consideration. If this turns out to be the end of the impulse leg, so if that's going to be the end of the impulse leg, then we should be having our Fibonacci retracement tool run through this previous impulse leg, after which we want to be identifying a sell window around the 50 and the 78.6% of that impulse leg. So we have somewhere around here between this area and this area as a sell window. So let's label it for the sake of clarity. So we have a sell window around here. So what this simply means is that if price continues to go to the upside and comes back into where it started this week, then we want to be looking forward to reversal pattern around here to join the decline to the downside. So that was the first scenario I'm looking forward to. Then the second scenario I am looking forward to is this. Now look at this impulsive move that started this week. We saw price climb around from around the $20 level and right back into the $19.70 area. And what did we see happen here? Since the early hours of today, we saw how this level has been rejected multiple times by the buyer. So what this simply means is that there are buying attempts from this area, as participants were likely looking at, okay, I think the silver is cheap enough to buy, and this buy might be leading right back into the structure. We don't know. So I was able to identify this level at the $19.70 as an area where we've been seeing buying pressure in the last 4 to 5 hours now. However, with a structure identifier around this area, if a breakdown of that structure happens and a retest to structure happens, then that's likely going to be a signal that price is continuing to go to the downside. And in the last 3 hours now, what did we see here? We saw a breakdown of that structure, which was followed by an engulfing candle that took price right back above the $19.70 area. So what this simply means is that we want to see how price is going to be relating to the structure around this area during the New York session today. So what I want to be seeing here is to see if let me identify this level. So we have a channel here already. So I want to be let me give this a purple as well, so that it can have the same look with what we have as our support level. So we have the $19 is it $19.85? So let's label it. So we have $19.85. So we have $19.85 here. Let me make this a purple color and place it right at the top right hand side of my screen. All right, so we have a channel here already, and then we had a breakdown of the structure here. So one thing I want to be doing here is that if price continues to the downside, that is price continue right below the $19.70 area, I want to be selling the XAGUSD, and I will be moving my stop loss accordingly to protect my position. The reason why I'm going to be moving my stop loss when price break down this $19.70 is simply because, remember, we are within a buy zone which we identify on the hour time frame. So we want to be very, very cautious and be mindful so that we don't get caught up in any sudden pullback that is likely going to be taking us out of our position. So we want to be protecting our position as soon as price break below the $19.70 area to the downside. However, if price breaks right above the $19.85 area, we don't want to get too excited. We want to wait for price to give us a retest of that structure, and I will be seeing this as a retracement of that impulsive move. So if you are a counter trend trader, a breakout retest of the structure might be an opportunity to join the rally to the upside. And if price continue to move to the upside, you want to move your stop loss accordingly to protect your position. As you know, we are on a very strong long-term bearish momentum here on the silver. So if a breakout retest of the $19.85 level happens, we want to be having our take profit target somewhere around the neckline area, which we identified at around the $20 30-cent area, which is also going to be the sell window where we want to wait for selling opportunities here. So if you're a counter trend trader, a breakout of retest of structure happens, you want to join the rally. But if you are not a counter trend trader and a breakout of structure happens, then we want to be patient to wait for price to come back into somewhere around here, where we want to be looking out for patterns on lower time frame that will be supporting a trend continuation to the downside from that point. So this is how I intend to trade the XAGUSD for this week. So let's see how price action plays out in the next couple of hours, and let's see what happens within the structure right between the $19.85 and the $19.70 area during the New York session today. If you have any questions, you need further clarifications, feel free to drop in your inquiries in the comment section, and I will try to look at the comment section from time to time to be of help. So I'm already right on time right now, but I wish I share the USDJPY, since I promised that I'm going to be doing something on that pair. So let's quickly look at the USDJPY and let's see what our expectation is going to be like on the USDJPY in the New York session today. So I'll quickly run through this because of time, and let's go to the daily time frame. And remember, we've been on this pair since it's about 3 weeks now. We've been expecting that bearish momentum to happen to take price right back into that bullish trend line here, or the neckline that was broken during the month of August here. But since then, we've not seen that move, and price has continued to consolidate right around the supply zone that we have identified at the 145 Japanese yen level. So we can see that since the month of September, we saw every attempt by the buyers to push price right above the 145 Japanese yen level has been met with stiff resistance from the sellers, hereby pushing price right within the channel. So if we scale down to the 4 hours time frame, we can see how price has been caught within a very strong channel. Hold on a second, I will show you that in a moment. So we have this channel right here. I would deleted this. Oh my goodness. I was supposed to have a channel here. So we're supposed to have the channel around here. I think around the 145 or the 146. I'm not sure why that was deleted. Okay, so we have the 145.500 area. So we have, let me label that area before I move forward. So we have the 145.500 area as a channel. So we had a channel in the last 2 weeks now. Price has been caught within a consolidation phase here, as we can see, between the 145.500 and the 144 area. Excuse me. However, if we look closely into the structure and see what has been happening during the later part of last week rather, we can see that we have a bullish trend line, as in price has been tending towards the resistance level of this channel. So there is a buying pressure to push price right above that level. And during the later part of last week trading session, we saw the final breakout of the 145.500 Japanese yen level. So we saw that this level has not been broken in the last 1 month. We saw this level has not been broken since the last 1 month here, but during the later part of last week, we saw the breakout of that 145.500 area to give us a clue that there is a possible tendency of a bullish momentum at this point in the market. But we are not going to be jumping into any conclusions here, as we remember we are still within a very strong supply zone which we identified here. We are still within a very strong supply zone, and anything could actually happen in such a way that a breakdown could happen. So with the channel we have here, definitely we want to be waiting for signals. When we have a channel like this, we want to either wait for a breakout of that structure to happen, where a retest of structure will give us a confirmation to join the rally to the upside, or we could be having a breakdown of that channel in such a way that price break down the support level, retest the structure, and send price to the downside. That's quite a very long phase of movement there. But if we scale down to the 1 hour time frame, we begin to see things more clearly, as we begin to see how participants in this market has actually been relating with the support level of that channel we identified on the 4 hours time frame. So right now, since the beginning of the week, we can see our price has been consolidating right within the 145.500 level and the 146.650 area. though we are still within a very strong supply zone, as I showed you on the higher time frame. So we can see we are within the channel right now. And I was able to identify that channel. And what I said here is that since we already have a channel, that makes our job simple. What we're going to be looking forward to is a signal. The signal could be either side. It could be a breakout of the resistance level, after which a retest to structure will be giving us a confirmation of a trend continuation to the upside, or we could be having a breakdown of the support level of that channel at the 145.500 area, after which a retest to structure will be giving us a confirmation to join the decline to the downside. Now, in addition to the channel I identified between the 145.650 and the 145.500 area, I was able to identify a bullish trend line that will make our job easier for this week. So if we look at what has been happening since last week, the later part of last week trading session, we can see that price has been finding higher highs and higher lows, and as a result of these, I was able to connect the series of higher lows here to give me that temporary bullish trend line, I will call it for now, and this is what we have here. So we have the bullish trend line at this point, and prices continue to trade right above that bullish trend line. So going into the New York session today, which is the new week, the beginning of the new week, we want to be using this bullish trend line coupled with the channel between the 145.300 and the 145.650 as our yardstick for trading opportunities for this week. So if we are going to be having a breakdown of the support level of this channel, we want to see that breakdown share a confluence with that bullish trend line. So if we have a breakdown of both the bullish trend line and the support level of at the 145.500 area, we want to be seeing this as a bearish signal. Remember, we are not getting too excited when the signal happens, as we want to wait for further confirmation to happen, which is likely going to come in the form of a retest of either the structure here, that is the bullish trend line, or probably the 145.500 area, after which we look out for patterns on lower time frame to join the decline to the downside. And if we are going to be joining the decline to the downside, our take profit target will definitely be at the support level, at the support area of the channel we identified on the higher time frame, which is around the 144 Japanese yen area, which will be dovetailing to somewhere between let's see how many pips that is, at least a minimum of about 100 pips thereabout. And if price continue to break that support level to the downside, then we want to be looking to add more position at a retest of that structure. So that is the selling perspective we are going to be looking forward to on the USDJPY. And then the other scenario I want to be looking forward to is if price breaks out the 145.650 level. Remember, we are not getting too excited to join that rally. We want to wait for price to give us further confirmation, which is likely going to come in the form of a retest of that structure. It could come in form of a retest of the structure. It might even come to do a retest of that bullish trend line, respecting it one more time, evolving into a reversal pattern on lower time frame that will be supporting a trend continuation to the upside. So I want us to be very, very careful at this point and take into consideration the fact that we are still within a very strong supply zone, which I shared with you on the daily is it on the daily time frame? Okay, on the 4 hours time frame. So this is how we intend to trade the USDJPY for this week. So let's see how price action plays out in the next 24 hours, and definitely we're going to be coming here tomorrow to do a follow-up detail on this pair. So on this note, I will want to call it a day, but before I do, let's quickly run through and do a recap of what we've talked about so far today. So we started the day with the US oil, and what was our expectation on the US oil? So we had a scenario here on the US oil where price has been consolidating right within the $93.50 area and the $91.50 area. And one thing I said here is that we want to be waiting for a signal to happen in form of a breakout or a breakdown of the structure. So if we are going to be seeing a breakout to the upside, then a retest of structure should be giving us a confirmation to join the rally to the upside. And if price breaks down the $91.50 area, then a retest should be giving us a confirmation to join the decline to the downside. Remember, we are on a very strong bullish momentum on the US oil, and if price breaks down the $91.50 level to the downside, we want to be having the key level at the $86 area as our take profit target, which will be dovetailed into somewhere around 550 pips thereabout to catch there. And I want to be seeing that a situation where price might likely do a retracement back into this area, with multiple rejection here to inside the trend continuation. That is the second wave of that bullish momentum that began last week. So that's how we want to be trading the US oil. Then we went on to talk about the US tech. Now on the US tech, we are caught within the channel also on the US tech that is right around between the $11,000 and the 11,050 cent area and the 10,950 cent level. And remember, this channel that we have identified here is sitting right within the strong demand zone we identified on the higher time frame. Remember, we had this demand zone on the higher time frame, so we want to be very careful here, as we don't want to jump into any sudden trade here. So we want to be patient enough to wait for a signal to happen. So we have a channel here which is more or less, from a technical standpoint, a bearish rectangular pattern. So if we are looking at it from a technical standpoint, we should be expecting that price is going to break down the structure, after which a retest of structure will be giving us a confirmation to join the decline to the downside. Remember, we want to see a breakdown of this demand zone to be comfortable that price is actually going to the downside here. However, if price breaks right above the $11,050 area, then a retest of structure should give us further confirmation to join the rally to the upside. And if a breakout retest happens to the upside, then definitely still lines up with the buying potential that this level or this area is known for in the last 4 to 5 months now. So that is that on the US tech. Then we went on to talk about the gold. And on the gold, we expecting that we actually on a very strong bearish momentum, which I showed you on the daily time frame. After connecting the series of lower highs, we were able to identify this bearish trend line. And one interesting thing that we saw during the course of last week trading session was that price action evolved into a reversal pattern right within that bearish trend line to give us a clue of how strong the sellers are at this point. Now, this led to a further breakdown of that neckline at the $1,705 area, though we had a rejection of that level that pushed price to the downside. I told you I missed this move during the early hours of today, as I woke up very late and I actually missed that, which was painful though, but it's okay. Let's see if the market is going to give us a second chance to join the rally. Sorry, the decline. So in order to do that, one thing I said is that the $1,680 level, which is the major key level that's going to be guiding our action for this week, we want to see how price action is going to relate to that structure during the New York session today. So if we continue to see price go to the upside here in such a way that we have a scenario where buyers continue to reject this area, this might likely be a retracement of that impulsive move that happened last week that broke down the neckline here. Then we want to be patient to see how participants is going to relate with the sell window here, which also lines up with the bearish trend line we identified on the daily time frame to join the decline to the downside. And at that point, if a breakdown now finally happens of the $1,680 level, retest of structure will be sending price crashing to the downside, and that will welcome another position to be added to our existing trade. So that is the first scenario we are looking at on the XAUUSD. However, if we have an outright breakdown of the $1,680 level, currently price is trading right below that level, but I'm not convinced that this is more or less a significant breakdown of that structure. So one thing I want to be looking forward to is a significant breakdown of that structure. I want to see something like this and a retest of that structure to join, probably followed by multiple rejection of that $1,680 level to join the decline to the downside. So these are the scenarios we are looking forward to on the XAUUSD. Then we went on to talk about the GBPUSD, where we are also looking forward to a bearish momentum here on the GBPUSD. And one thing we noticed on the GBPUSD was that we had a 1.1400 level which has been respected. Which was respected last week. We saw the breakdown a couple of weeks ago around this area. Price came back to do a retest of that structure to incite a further decline in price action. So in that regard, we are looking forward to a sell momentum. But however, we won't ignore the fact that this bullish move that started a couple of weeks ago could be actually pushing price to the upside. So we identified the buy zone around this area, which also lines up with the neckline of this reversal pattern here. So we have our take profit target. If the sell momentum begins, we have our take profit target somewhere around here. And then we want to be looking forward to how price is going to be relating to the structure around the neckline area here. If we are going to be having multiple rejection of that level to push price to the upside, then we want to be getting ready to join the bullish momentum. However, if a breakdown of that structure happens, then definitely that means that a retest of structure with multiple rejection of the neckline here might likely be sending price crashing to the downside. So we want to be on standby to be able to take advantage of either of this opportunity at this point. Now, going back into the channel that we have identified here since the beginning of the week, right around the 1.11100 level and the 1.10500 level, that is, we have this channel here. We also, I already showed you that a breakdown of that structure will give us a signal, then a retest will give us a confirmation to join the decline. However, if a break above that level happens, then a retest of structure should be giving us a confirmation to join the rally with a take profit target sitting somewhere around the 1.1400 area, and that means that price might likely want to be continue with the momentum it started a couple of weeks ago. So let's be on standby to be able to take advantage of either of these possible opportunities that might likely happen. Then we went on to talk about the silver, which is the XAGUSD. And on the XAGUSD, we notice our price has been on a very strong bearish momentum. And coupled with that, on the 4 hours time frame, we identified a reversal pattern on which also lines up with that bearish trend line we identified on the daily time frame, remember? So we have this reversal pattern around here in the form of a double top structure, which also lines up with a very strong key level we identify at the $21 level. So we had the neckline broken during the course of last week, giving us a confirmation that this reversal pattern is mature. So one thing I said here is that we are looking forward to two possible options here. Since we had this double top structure leading to the breakdown of this area, we might likely see price come back to do a retest of this neckline at the $20.30 area, after which reversal pattern here might be inciting a trend continuation to the downside. So in that regard, we were able to identify a sell window around the $20.30 area after using our Fibonacci retracement tool, running it through this previous impulse leg to identify our golden zone area between the 50 and the 78.6% of that previous impulse leg. Then we scale down to the 1 hour time frame here, where we begin to see things more clearly. So on the 1 hour time frame, what we observe on the 1 hour time frame is that price started this week around the $20 level. I told you I missed this move as well. The silver and the gold started this week very, very rapid, and I missed this move to the downside. But we want to see if the market is going to give us a second chance. So what we are looking forward to at this point is that price might likely come back to do a retest of this area, probably come to where price started this week, after which we want to be looking out for reversal patterns to join the decline to the downside. So but one thing we observed here is that as soon as this move came into the $19.70 area, price was caught within a channel for like 6 good hours. So what this tells us is that there is an indecision around this point, as participants are not sure if we are going to be continuing to the downside here, or we're going to be having a retracement back into the neckline to inside that trend continuation to the downside. So with the breakdown of the $19.70 area here, I said if price continues to the downside, I want to be joining the decline with a take profit target sitting right within the buy zone here. However, if a breakout of the $19.85 happen, a breakout of the structure happen, we don't get too excited. We want to wait for price action to give us a confirmation in the form of a retest of structure, after which we look out for patterns on lower time frame to join the rally to the upside. So if you are a counter trend trader or a short-term trader or a scalper, you might want to be taking advantage of this breakout of the $19.85 retest of structure, join the rally, and move your stop loss accordingly, because this is more or less a counter trend trade. But if you are not a counter trend trader, then you want to be patient to see how this retracement move is going to run. Want to see how far it's want to go, and want to see how it's going to relate with the sell window around here, where we want to be looking out for patterns on lower time frame that supports a trend continuation to the downside from that point. So that is our view on the silver. Then we went on to close the day with the USDJPY, where I emphasized the fact that price has been within a very strong supply zone since the beginning of the month of September. So I showed you that on the 4 hours time frame, price is still within a very strong supply zone here, and since for the last 1 month now, we've been expecting that bearish momentum to line up with that bullish trend line we identified on the daily time frame, but that has not happened, as price has continued to consolidate right within that supply zone. So I'm more or less on the view that the Bank of Japan's intervention 3 weeks ago is still lingering on in this market. So now when we scale down to, let me see where that was. Okay, when we scale down to the 1 hour time frame, we begin to see a little structure that wants to give us a hint into what our expectation is going to be like. So like I said, we had a channel right within the 145.500 and the 144.00 level, where we said a breakout or breakdown of this channel will be giving us a confirmation of where price might be going. So what we did on the 1 hour time frame is to look at how participants has been relating to the resistance level of the channel. So we saw a breakout of the resistance level of that channel during the later part of last week's trading session, and since the beginning of this week, price has been oscillating right within the 145.650 and the 145.500 area since the beginning of the week. So there is an indecision in this market right now. So we identify that channel, and then in addition to that, to make our job easier during the New York session, I was also able to identify this bullish trend line, which I'll be calling a temporary one at this point, as price action has been respecting this bullish trend line since the later part of last week trading session. So what we want to be looking forward to during the New York session today is a breakdown or a breakout of this channel. So if we have a breakdown of the 145.300 area, which also shares a confluence with the bullish trend line here, then we want to be looking forward to a retest to structure to join the decline to the downside, with the take profit target sitting right around the 144 Japanese yen area, which is more or less the support level of the channel, which we have identified on the higher time frame. Now, that is one scenario we are looking forward to. Then the other scenario is if price breaks out of the 145.650 level. Remember, we are not getting too excited at the breakout of that structure. We want to wait for confirmations to happen in the form of a retest of that structure. So the retest will either come in the form of a retest of the 145.650 area, or probably the bullish trend line here, in such a way that price evolved into a reversal pattern on lower time frame to join the rally to the upside. We need to be very careful here. Remember, we are still within a very strong supply zone, and there is a possibility that we could be having the possibility of a breakdown of the 145.500 area is more or less higher than the buy potential here. So let's be mindful of what is going on here. If a breakout of the 145.650 happens, a retest, we want to see tendencies of a bullish potential before we want to be joining that rally to the upside. So on this note, I want to be calling it a day. I really appreciate every single one of you, and it has been a wonderful moment to I'm very glad that we are back live and things are moving on as expected. Remember, during the New York session, we don't want to get too excited whenever we sight a bullish or a bearish engulfing candle, giving us a signal that is a breakout of a structure. We want to be patient to wait for price to give us a confirmation that price is actually going our way before we join the rally or the decline. And the confirmation will definitely come in the form of a retest of that structure before we want to be joining that potential opportunity. Remember, we don't want to jump into any trade that is any unnecessary trade at this point in the market. We want to wait for that confirmation to happen, and if the confirmation does not happen, we want to pass the trade. There are lots and lots of opportunity in the financial market that we can always take advantage of. So on this note, I want to wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 11 a.m. West African time, 10 a.m. UTC, and let's come again to evaluate the financial market and get prepared for the New York session tomorrow. Bye bye.